real estate market, the alternative real estate investment seminars are the game changer. Tired of traditional opportunities that seem out of reach or too mainstream to yield significant profits? Enter a smarter path with our expert-led seminars designed for aspiring investors eager to explore tax lien and deed investments. This platform offers tailored consultant services and detailed strategies for lucrative returns. Dive deep into expansive learning with on-demand real estate educational seminars and seize the moment to transform investment dreams into reality. Ready to unlock potential? Check us out today.
All right, blessings, and good afternoon. If you don't know who I am, my name is Lady Lashley. You can call me Lashley, you can call me Grace. Just call me on time. Today, we are here like we are every week. Wednesdays at 2 p.m. down at the Fulton County Library where we host economic development seminars. And today, we are on week 3 of our economic development seminar. If you don't know what it is, let me give you a brief introduction. We have heavy information to go over today. Not too heavy. We're gonna get into the mind mechanics of assets versus liabilities. Don't get disturbed. This is not your typical, okay? We're talking about mindset, assets versus liabilities in business, relationships, and in our community. We're gonna intertwine all of that because our goal at the end of these economic development seminars not only have a comprehensive business plan that you can use to acquire a real loan, okay? I can show you that. But you're gonna have that mindset and tools and discipline that you need to make sure that your business actually thrives. That's what we're doing. We're doing deep dive, okay? We're gonna dot our I's and cross our T's. So, in the little Atlantic Strong Economic Development Series, me, Miss Lashley, what we offer our participants is an opportunity to delve in a comprehensive strategic plan for fostering economic growth in a variety of cities. Usually those cities are going to be urban cities because I want you guys to take back what's rightfully yours. And that is by acquiring business, land, power, and money. And then you can shape the tone of what's going on in your community through, how can I say, community-based activities that tells our government what we need. Does that make sense? So it's a whole build-up for this. So through the series of interactive workshops where I'm telling you guys, if I say something more than one time, just text it to yourself because that is something that you may need in your business plan, or that is a really important segment that you need to process because as business owners in the urban community, I have noticed that we have to do our due diligence. So there's some things that I'm gonna break down, okay? I'm Miss Due Diligence Susie. Let's go. All right, so let's move forward. I do want you guys to know is we are in week 3, and what I'm gonna be doing is combining a series of topics together because this is actually, it's a 12-week seminar, but I have 16 weeks worth of content, okay? So today what we're gonna be combining in our 3rd week is, we did last week measuring success and ensuring accountability as well as organizational management and development. That was part of coming together on your business plan of how would the structure of my business be? Who will work for me? Who's gonna be the boss? Where I'm gonna delegate? What are my expectations? That's what we were talking about last week. And just being consistent, okay? And making sure that when we ask for someone to be credible, we are doing the same thing. All right, so this week we're going to be moving on to assets versus liability, understanding the building blocks of financial health, because this is going to help you get prepared for the financial and market analyzation section of our business plan. These concepts that I talk about in this today and probably into next week, you're going to want to know them, you're going to want to crush them, you're going to want to cook on them, and you're going to use them in all 3 sectors of what we're talking about: business development, community development, and self-development, i.e. family development, breaking generational curses. Okay? All right, thank you for being here. We're also going to go into stretching every dollar, building and saving for low-income communities. And the reason why I think it's very important that we have to go back to the building blocks of that, because people forgot how to budget and save. Yeah, it's not an easy thing to do. You say, hey, I'm gonna save this, I'm gonna do that, but then when it gets down to discipline and actually using strategic approach to saving, we tend to not do it, and that's what we're building right now at the beginning of the building blocks of our pre-business establishment. Because if you don't have your home together, you're not gonna be able to get your business together, and if your business not gonna get together, you're not gonna be able to have your community together. Does that make sense and make a difference that you really wanna make? Now, guys, give me a second, I'm about to switch my mic real quick, because I think this mic will not cut on, but maybe this one will. If you are on the Facebook page, I want to say thank you for joining us. If you want content related to tax liens and tax deed, alternative real estate investment, please join us on YouTube or on our YouTube channel, Prime Time Homebuyers. Right now, we are streaming on our sister channel, Secure Your Energy, where we hold our events and we talk to the general public. And we celebrate Black excellence. Shout out to our last event we went to in Chicago, where we went to, I think it was precision. It's Prestige Real Estate. Prestige Real Estate. That company is headed by a beautiful lady who I love, and they were going on her 34th anniversary. So go check out that video. Yes, we edited it. We had some fun. We danced. We played. That's what you do when you work for 40 years and you get back to the community and you build yourself up. So shout out to Miss Sharp. Okay. One of our partners. Now let's move forward. Now, do we have it on the board? We're gonna get to the PowerPoint. I said, do we have it on the board? Let me get my stuff together as I should have been doing while I was sitting here talking to you guys, but it's okay. Now we're gonna go into the simple part of assets versus liability. And I don't want y'all to say, I know what this is. I don't need to hear this. This is for simpletons. No, not the way that we break it down. We're gonna make sure that you think outside the box when it comes to assets versus liabilities. See, you be able to turn this one just a little bit. That one, this, yeah, just a little bit. Yep, perfect. All right, so we got it on the screen. Y'all probably won't be able to see everything, but we're gonna talk you through it right now. Assets versus liability. The concepts that we're gonna be addressing today is what are assets, what are liability, the relationship between assets and liability, and the net worth equation. This is not only about a tangible asset or a tangible liability. We're talking about relationships. We're talking about approaches to handling your business. Am I a liability or asset for the industry that I'm in? These are the things that we have to talk about seriously and start to consider before we move forward. So this is why this is the building block. So we already know that assets are resources that's owned and controlled by individuals or business that have future economic value. It is also based on, assets can be, like I told you, based on relationships. So you have to pick and choose who you do business with, what type of value they bring to your business, because in the building stages of building partnerships or even connections that you need to get your product done, is this company gonna be an asset or is it gonna be a liability dealing with them? And it's not about reputation only, but can they get my product to me? Is this person reliable? That's why we talked about reliability, credibility, and making sure that people keep their word when it comes to getting the job done. So this is the same thing that we're gonna be evaluating under this concept of assets versus liability. So these things are things that you can possess or have a situational relationship with that will help generate income, generate relationships, appreciate in value, meaning go up in value, okay? Or be conserved to be cashed in later. So, types of assets: cash, accounts receivable, inventory, short-term investments. Let's get to it. Okay, so current assets, there are assets that can be easily converted into cash within a year, and that's the examples that I just gave you, which is cash, accounts receivable, inventory, short-term investments. These are the assets that you want to make sure that you acquire for your business, that these particular four topics are your first go-to. You want to make sure you have cash flow, That cash flow is monitored and regulated correctly and in separate accounts from your personal account. Accounts receivable, you want to make sure that wherever your money is coming in is being tracked. So when it comes down to tax season, you will be able to differentiate from your business money versus your personal money. Accounts receivable, these are the things that you want to talk about now, start thinking about now. These are types of assets to you, okay? Inventory, how much inventory are you going to keep? That's going to also mess with your profit margin. If you try to keep a certain amount of inventory, you got to make sure that you're actually selling these particular products. But inventory is usually more of an asset if you're moving the inventory, and that's why when we get into market, analyzing the market, competition, and how they move, how they flow stuff, we pay attention to that as well, and that'll tell us what we need to do with inventory. But again, that's an asset. Short-term investments. These are assets that you want to keep in mind, because when you're going into the borrowing process, which we do plan to do in the first or second year of our business, these are the things that I recommend that you know about, at least have one or two set up, because diversity will get you far. Short-term investments like stocks, bonds, and other investments that you can sell within a year that can be liquidated. If you have these things that are connected to your direct business, it makes you look more lendable, especially if these particular assets is in the name of your business. That's why we always have to separate our business assets from our personal assets, okay? Now again, these are some of the things that we're going to be talking about later on in this series when we talk about acquiring assets, and that is land. These are fixed assets that takes a little bit more to liquidate. That's land, buildings, and equipment. And as business owners, even though we're not probably going into owning this type of stuff right now, in the near future, this is something you may need. It may be better for you to own land and be able to use it for your business versus you rent a place. Depends on what type of business you're in. You know, maybe you own a dance studio, maybe you do a dance studio, and it's better for you to own that place eventually instead of paying the inflation that is out of control when it comes to rent. Does that make sense? So that's where we're measuring assets versus liability. And that's the same thing that we have to do in our personal life. What's gonna be an asset versus a liability? Are we gonna get this new car that depreciate in less than a day or whenever I take it off the lot? Or are we gonna save to put that money towards a home, our business, and just get a car that we can afford right now? This is the mindset I want you to start to have, because we're talking about assets versus liability. And again, you can be your own assets or your own liability, depending on the way you move. Now again, we want to look at fixed assets. That's to have in all three aspects. That's personal, business, and community. That's all I'm saying. And that's land, property owned by the business or yourself. Buildings, factories, office, warehouse. Maybe you need storage. Maybe you're paying for storage all the time. Okay, and the storage fees is a lot, and you know your whatever you is non-biodegradable. I don't know, it doesn't mess up a lot, and you can literally pay a neighbor to store it in their garage or whatever. You can set up a shorter contract, starting to bring the money back into your community. Okay, you'll have your storage next to you, and that'll probably save you money to get your own little storage in the back of your house. Does that make sense? So that becomes an asset to you. These are the things that you want to think about in the future, because lenders like to see that. Like for the first year, my plan is to have 500 items of my product, and I'm going to have it in storage. In storage for the year, the storage amount is about $5,000. I'm just throwing that out there. Later on, you basically saying instead of the next year we do an investment of $5,000 in a storage unit, renting, we may go to Home Depot and just put one on our property. The lender is like, whoa, okay, they're smart. Now they're talking about budgeting, and that's in their 2 to 3 year plan. That's how detailed you want to be with your assets and liability documentation, because that's what's going to make the lender see you for who you are and see how credible you are, how serious you are. Does that make sense? They're always like, oh, that plan is mutated. Now I see that they may be lendable, okay? And equipment. Again, this will be an asset to you, maybe not right now, but in the future, you wanna plan it, you start looking into it now. Maybe you need a deep freezer for what you do, and you got somebody else, you got all your stuff in a certain place where they storage your food. I don't know, but some places who have restaurants, they have extra storage somewhere, this, that, and the third. Maybe it'd be best for you to buy actual 2 deep freezers. These type of things, and this can be written off, these are tax deductible, especially if it's for your business, and you want to start thinking about that now, and you're like, well, I'm saving money because I'm able to storage more things that I have on sale, this, that, and the third. That's like if you're a chef or whatever. I'm just throwing things out there, because again, we have to know what assets versus liability is all based on the time frame on when you move and how you move, okay? You don't want to just buy everything now. Like I said, your potential is probably to get 500 items to have as inventory, but right now we're starting with 200. And then you're showing the lender in 6 months, I'm gonna have 300. And then by next year, I'm gonna have 500 and I have a storage place because this is the income that I can bring in. I'm kind of getting further into our financial part of building a business plan, but these are the concepts that we're thinking about now. These are the building blocks. That's why it's so important, okay? Right in week 3. Now, intangible assets. Intangible assets, these are assets that have no physical form, okay? Again, like friendships, relationships, things like that, but still hold economic value. Example, out of friendship, relationships, partnership, patents, trademarks, copyright, okay? Goodwill, that's friendship, relationships, okay? Patents, again, I tell you guys, whatever it is, you have something that you invented or whatever, and you believe in it. Get it patented. It probably cost you $800 or whatever to get somebody to help you out through it. But if you believe in your product and your name, get it patented. Get your stuff trademarked. Trademark what you create. Make sure that you own it so you can decrease the liability of someone stealing your assets and taking your idea and making it theirs while you're getting yourself on your feet. That I promise you, don't get disturbed. So this is assets that you start at the beginning to protect yourself from liabilities. Copyright, especially we got content creators. That's the big thing. Everybody's content creators, and we're in so many different fields. Know about copywriting. Legal rights granted to the creator of the original work. Copyright your stuff. And lastly, again, like I highlight, your relationships, goodwill. The value of the company, the value of your relationship sets the reputation or of the brand name and who you are. So again, goodwill, even things won't always be perfect. If you're going in with goodwill and good intentions, no matter how messed up it becomes, I promise you, God will get you out of that situation. Make sure He allow you to turn the liability into an asset. So financial assets, as we talked about, stock, bonds, mutual funds, these are things that you want to start now. Open a Robinhood account in your business name. Why not? Try it. Play around a little bit. One for your personal, one for your business. Why not? They're taxed different, and that's supposed to be different monies for different things, okay? Make sure that the first 2 years of money coming in, at least 2 to 3 years of your business, that you're literally seeding it back into your business or you're saving it, period. Don't talk about I'm not gonna pay myself. I don't care if you're making a lot of money. First, get your stuff together first. First, get your whole structure together, then you start paying yourself. That's how serious it is if you want to build a business that's going to last for a long time, because it's not always about you just cutting a check for yourself, okay? So, examples of assets in personal finances that you want to make sure that you keep up to par, keep yourself out of debt. Your home, make sure that you don't have bankruptcies, you don't have liens on yourself. These are things that you want to work on now. You want to clear this all up in the first year when you're making your business plan, you're saving money. This is where we're at right now. In class 3, we're just still coming together with our idea. We want structure. How do we do this? We want financial education. That's kind of what we're putting together right now before we physically put pen to paper, okay? So you want to be mindful of, like I said, do you need to buy a new car or you buy a used car for right now, because your budget and savings for the first 2 years, and it starts in your house. And If you don't remember, for our first set of series, I emphasized the relationship of educating your kids about financial education, because it starts with them. Their expectations may be all over the place, and that may drive you down the road of bankruptcy. You see what I'm saying? Or again, they may not be aligned with the family business or things like that, and you just want to talk. You want to figure out how you guys can support each other. So I didn't really get too much into that this time around, but I just want to let you know that's very important. Investing, again, personal stock, bonds, mutual funds for yourself, because at this point right now, a lot of businesses, if you are working, they are trying to keep people below full-time, and that's part-time, and once you're part-time or PRN, no business benefits. So you need to make sure that you're planning for your future. I have talked about this on other platforms where we may not have no social security. This is why we're doing the things that we're doing, because we have to plan for our retirement. We are the Generation Z. Baby boomers are moving on out, and it's our turn. I just came across a statistic that we have the highest rate of debt in America, and the millennials have the lowest rate to get assets the way that the economy is set up. So that's why I said we have to bridge our gap between the millennials and us, because Generation Z and the millennials, because if we don't get it together, they're going to outdo us, okay? We got the debt, they got no hope. We like, okay, let's just put this together and make this happen. We'll talk about that. Now, again, make sure your savings accounts are good, checking accounts are good. Other things that could be assets, honestly, collectible, guys. I've been watching those antique shows. Sometimes they have collectibles that's worth millions of dollars. So those are assets for some people who are collectibles, and banks do actually look at that as things that is worth value, okay? And real estate investment, and that is actually the last 2 weeks of our seminar, where I'm going to get into showing you guys how to invest in alternative real estate, making sure you connect it to your business, okay? So let's get into this now. We're moving forward. Liabilities, we know what that is. Liabilities are obligations or debts that you owe to others, or relationships or situations that can do more help than harm. They represent claims against your assets, against your person, against your business. In essence, they are what you owe to creditors, suppliers, and other parties. A healthy financial picture involves managing your liabilities effectively. Partnerships, if you have a partner that can't keep the eggs in the ducky and they're always in debt, and that's your business partner, that may not be helpful for you. Does that make sense? So again, these are liabilities that I want you guys to pay attention to, not only personal but business liabilities that you want to keep in mind right now. Because we're starting to budget and save. We're starting to budget to see what we're going to need to have a functional business. I have this product. It cost me $50 to make it, because I have to get the product, get it to the manufacturer. I got to do this one more step, and then I got to get it out. It's a $50 process, and I sell it for $75. Let's talk about it. Now again, this is going to get into our liabilities, because you're dishing out. That's part of your liability, so that's not an asset yet. I know you like, my mention's an asset, but until you make some money, it's a liability. So we have to make sure that we're wearing our P's and Q's correctly. So account payable, money owed to suppliers, okay, for goods, services purchased by credit. Usually we do that sometimes as new business owners, and that can create more liability. That's why we say take that whole first year and save. Save just a little bit. Salary payable, wages owed to employees, to people you contract to. Those are the things that's going to be in your financial outlook section of your business plan. These are things you want to keep in mind. What salaries or what contractors would I have in a year from now that will help me? One, lower my liability, lower my workload, and get my product out fast. We're thinking about them now, but they are liabilities because you have to pay out before you get anything back. Short-term loans, these are liabilities. These are things that you may want to stay away from. Definitely if you don't have the income to pay them back. That's why I said the best thing to do is wait a year or two to try to get a business loan. And at that time, you probably most likely build a nice savings account. You build your personal credit up. You are probably able to open a line of credit for your business. and you may have acquired an asset. So it makes you move to get to that point where it's time for you to expand. All right, so short-term loans is not always the best idea. They have a high interest rate, and you want to make sure you have a suitable income so that it becomes a liability. Credit card debt. Sometimes you end up buying a whole bunch of product on a credit card, and with the hopes that you'll sell it. But if you don't got pre-sales and you don't know you got an audience yet, don't dupe so many. You know, you can try to find a way to order, create as it comes, or have a few available, but you want to plan correctly because your investments, the first year investment can be a liability for new businesses. All right, so long-term liabilities, again, you want to keep this in mind. That's when we talk about alternative real estate. I love you guys, but mortgages is actually a liability, especially your first mortgage. You're going to have to pay out more than actually what you get. You get a little bit of stability, but you know what it is. So mortgages is a long-term liability. That these are debts that are due in more than 1 year. So these examples are mortgage, long-term loans, bond, payables, bond issues from companies to raise capital. So be mindful of those as well. They can be long-term assets actually, because if you're a new business, you're not paying out bonds. But I just want to give you an idea of that. These things you think about. Are you going to have a board? Are you going to ever get on? Get into the S&P 500, yeah, but you know what I'm talking about. Just start planning ahead of time, but I do think having a diverse portfolio, looking into bonds, investment is something that is pretty secure in a situation like this. It depends on what country bonds you actually invest in. All right, so examples of liability and personal finance, I want you guys to be aware of again. It's the mortgage payments, the car loans, the student loans, okay? Credit card debt, personal loans, and medical bills. These are the things that you want to try to keep a minimum, especially in the first 2 years, if you can avoid when you're trying to establish your amazing business. We want to keep this to a few. All right? The relationship between assets and liability, the net worth equation. I don't know if you ever heard of this, but it's very, very important to keep this concept in mind. The relationship between assets and liability, the net worth equation. What is it? The relationship between assets and liability is crucial for determining your net worth. So if you're dealing with a situation where it's more than a liability, it takes away from your net worth, be it financial, social, whatever. Net worth is calculated by subtracting your total liability from your total assets. So sometimes you have to weigh that relationship, sometimes you have to weigh that friendship, that business, connection, because it may be more of a liability especially when you're in your beginning phase of establishing your business. Does that make sense? Even later on, you just want to make sure. All right, so you don't want to take away from your net worth, which again is the total assets subtract from liability. Use this equation for everything. Relationships, finance investments, whatever. Use it. Is this behaviors? Is this asset or liability? What do I get out of this? How much would I get out of this if I do this? Does this make sense? We have to be very strategic in our approach when it comes to establishing our business, being credible in what we're representing, because in these first year or two of our business, we're also branding. Dun, 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 dun. So a positive network indicates that your assets outweigh your liabilities, suggesting financial stability. A negative worth means your liabilities exceed your assets, potentially signaling a need to improve your situation and make a better decision. Okay, so we're on the last PowerPoint of this particular section. I want to say thank you for being here. We're moving through. This is why understand assets and liability matters, because in financial planning, understanding your assets and liabilities help you create a realistic financial plan, set goals, and track your progress. Decision making. Knowing your financial position allows you to make informed decisions about investment, borrowing, and spending. Creditworthiness, relationship worthiness. Lenders, personal relationship, business relationship often assess your assets and liabilities to determine your creditworthiness or if they can deal with you.
which affects your ability to borrow money, move in society, and build your business up. Business management. For businesses, managing assets and liabilities efficiently is crucial for profitability, growth, and long-term sustainability. So let's stop looking at the short term and let's start looking at the long term, because we want to definitely get into some really good investment strategies. So as we're learning a little bit more about financial education and making sure that we keep our books together, we're going to get into that. A clear understanding of your net worth is essential to develop a sustainable and successful investment and business development strategy. And that's why I always say you guys have to be realistic about what's money coming in, what is the potential for your business to do good in this market. Maybe you can sell in another state. Maybe you need to do it on a platform that focus on your particular industry. Whatever it is, you want to know what's going to be the assets versus the liability and how to maneuver around it. All right, so we're going to move on to our next part of today's broadcast, where we're going to talk about creating leverage through assets acquisition. We probably mentioned some of the things that we talked about, but you want to create leverage. This is the reason why we're talking about this. Because if you don't get your house together, your house gonna blow away. No leverage. Does that make sense? All right, thank you for being here. If you don't know who I am, my name is Miss Lashley. I'm here every week, Wednesday at 2 p.m. down at the I do apologize, the Fulton County Library on Campbellton Road. I'm gonna say Columbia Drive. I'm in the A, y'all, okay? But we're on Campbellton Road. This is the Fulton County Library. I want to say thank you for partnering with me. This is our third series. So obviously, we're doing something good for the community. It's free. And I'll make sure that I have the sign up for people who want to come in person. I'm here every Wednesday. So let's get to it. Let's get to it. Please hit the like button. Thank you for being here, from keeping you not only entertained, but enlightened as well. Because it's time for us to take our community back, because at this point, we almost lost total control. So the first thing I always say, you gotta pay like you weigh. If you don't like the policies, the thing that's going on in your community, that means that you need to come in there and start lobbying. We have to lobby, because that's who actually is controlling our community, our banking industry, our interest rate. It's the people who lobby, who has the big businesses. So what does that mean? That we have to have the big businesses, and we're gonna do that. Just like the foundation of America allegedly was built on the working man, the business owner, that's what we're gonna bring it back to, so we can control inflation. Let me get off my high horse, y'all. If you don't know who I am, my name is Miss Lashley. All right, let's go. So creating leverage, we're about, what time is it? About a half an hour in, about another half an hour. All right, let's go. Creating leverage through assets acquisition. The power of owning your future. That's what I was talking about. We need to own our future because they own us right now. Why assets acquisition create leverage is what we're going to talk about. Example of assets that generate leverage. I think it's some of the things we talked about already, but we want you to reiterate the importance of having this in your business plan. Having this in your future plans for your personal development, portfolio development. It's not only just saving cash, because we already know the almighty dollar may be here today and not tomorrow. And just heads up, guys, I was so shocked. An ounce of gold, oh my God, it's close to like $6,000. Please don't quote me. I know the last time I saw the price of gold for an ounce was $2,000. It was $1,800 actually. Yeah, diversify your portfolio. Okay, moving forward. Just have to tell you that. Building your asset base, a strategic approach. And we're going to give you examples of assets that create leverage. It's pretty short. Let's get to it. One, why assets acquisition creates leverage? Think of assets as a tiny, tireless worker. This is what assets is. This is why it's so important. Building your wealth even when you sleep. And we have to figure out which type of assets actually do that. Here is how they contribute to leverage. One, it's passive income generation, I do apologize. Depending on what asset it is, it could be stocks, bonds, you could do a little bit of big, whatever you want to do, but it's passive income. Many assets such as rental properties can be as well. Dividends from paid stock, like we talked about, royalties from intellectual property, generating passive income from different adjacent, how can I say, things that may connect to your business. For instance, you do kids books, and then you make a little seminar to teach people how to make books, how you did it. That's a little asset. You gotta be diverse, okay, guys? Don't be stingy. Okay. All right. So passive income generation. These are why asset acquisition creates leverage, because you get a passive income. Appreciation and value. Some assets like real estate contain commodities or even collectibles can increase the value over time. You want to diversify your portfolio. This appreciation provides a potential source of capital gain for you in the future, increasing your wealth and providing funds for future investment and a strong base for your business, just in case you may have to liquidate, maybe come on rough times and you need, I gotta cash this out real quick, because we have some supply and demand of our product, and we have to expand. It may allow you to expand instead of just bad times. Does that make sense? So I'm not only talking about creating a great business plan to get a loan, but we're talking about concepts that's gonna get you financially ready to back up your plan strategically. All right? And also, again, what we were just saying, it increased borrowing power. Owning valuable assets can improve the credit worthiness and open the doors for more favorable loan terms for us, for you. This allows you to leverage existing assets to acquire even more, creating a virtuous cycle of growth. Okay? We put it all together. Okay, you're like, why do I want to invest in this today? Because it may help you later on to help fund your business. All right. Why assets acquisition creates leverage. Continue the tax advantages. This is the next thing that you want to think about. Not even next. It's like 1B of your business plan, because you're thinking about the entity that you're going to establish. It's going to be an LLC, it's going to be a corporation. If it's a corporation, then I'm going to have a board, then there's different ways of filing. These are the things that you need to know, but what type of tax benefits do it create? You know, I have a video that talks about the tremendous tax benefits of being a real estate business owner, and you don't have to be a real estate agent to be a real estate business owner, but it helps you claim more tax deductions depending on what you do with your property. If you're renting it out, you'll get tax deduction based that way. If you have a lot of equity in a property and you kind of split that up, I think it's a 1030 method. Don't quote me, but I think it's 1030 method, the tax where you can defer your, the amount of money that you have gotten this year over four years or so, meaning like if you got $10,000 in from your business and your property or whatever appreciated, you could split that over 4 years to help you balance out. So there's a lot of tax advantage with creating leverages and having these different portfolio or type of outlets for your portfolio, particularly real estate property. So it often comes with tax advantage, as we talked about, that significantly reduce your tax burden and free up more capital to reinvest, because that's what they want you to do. So once you sell a property, the best thing to do is to reinvest at least 90% of that money so you don't get taxed on it. We're going to the left, but we're talking about leveraging assets, baby. Okay, let's keep it going. These conversations for the grown adults. Sure thing. We getting the meat and butter here. Diversification and risk management is something that we have to keep in mind. Holding a diverse portfolio of assets across different sectors and geographics help to mitigate risk factor. You don't want everything in the house. You don't want everything in stocks. You don't want everything in your business. You don't want everything here. You want to have that split across, how can I say, a threshold of businesses avenues of investing, 401k, whatever, so you can mitigate your risk factors. Again, these are some of the things that you will talk to your lender about when they're ready to lend to you. Like, hey, I have a, how can I say? We have we have 5 bonds connected to our business that we acquired. And if we cash it out, when it's time to cash it out, we'll be receiving this amount of money. We plan on taking this out and reinfusing it into the business in 5 years because it's a government-backed bond. They're like, oh, okay, we already paid back already because they got an asset that we could use. Does that make sense? So you diversifying your portfolio creates leverage by mitigating risk factors. Example is assets that generate leverage. Again, that's real estate, stocks and bonds. You can invest in other business. Owning a profitable business is one way. Even a small one can generate significant income and write-offs for you guys. Even a small one. People go to the flea market and they sell things from their attic. And they make it a business and they make money. You know, they have this place called Second Time Around, and I bet you they got donations of clothes, they gave it a new life and resell them for pennies on the dollar. Okay, it's called Second Time Around. I said, whoa, they made money off of donated clothes. Please be diverse. Okay, be creative, guys. There's so many ways to make money. So another thing that people don't think about again is not only collectibles, but precious metals and commodities. Silver, oil, and other commodities can serve as a hedge against inflation and provide potential for appreciation. There's a lot of oil investment that's going on across the international borders, guys, not just here. I'm American, but I am God's child. So if there's another country that has great oil revenue, investing in, and they allow us to do it, big baby, I'm giving y'all a hint. Invest. Building your asset base, a strategic approach. Now this is where we're going to get to kind of like that mindset of how to approach this. Financial assessments, okay? Understanding
Hello,
financial situation, including your income, expenses, debt, and net worthiness. And that is for your personal business, so it can trickle into your business, your personal life, so it can trickle into your business. And again, once you start creating these personal documents like a financial sheet or profit loss sheet, you're gonna already have this in your database and you're gonna be able to use this for your business. Our thing is to get strategic, get disciplined, start doing it now so it won't look like a project later, okay? Financial goals. Your strategic approach should include financial goal, not only financial assessment, as we mentioned, but you need to have a financial goal. Define your financial goals, such as retirement, early financial independence, funding your children's education. What is your financial goal for your business? And that's the same thing that you're going to be putting in your financial portion of your business plan. In this 2 years, I expect to make $10,000 profit. They're going to ask you the how and the why. Education and research, investing in learning about different assets, classes, and strategies for acquiring and managing them effectively. Never think that you can't learn, guys. It is so important for you to continue to learn. This is what I push. There's a lot of free seminars, there's government seminars that teach you how to invest, what's coming up in the market, what's this, what's that. Jump in it, take it for free, just like what we give here. Education and research, invest time in learning about different asset classes. All right, so building your asset base again, starting small. Don't be intimidated by anything that I have said here today, okay? Don't be intimidated by the idea of acquiring expensive assets or these big ideas that we're throwing out. Just take one step at a time. Start with smaller, more manageable investments and goals, and gradually scale up as you gain experience and you become more diligent. Diversification. Spreading your investment across diverse assets, we talked about that. Patience and long-term perspective. This is an asset and it's very important, guys. Don't be upset if you don't have the support you need right now, or you don't have the money, but you have the idea. You need to take one step at a time and let God do the rest. Patience and long-term perspective. Assets acquisition is a long-term game. Business development is a long-term game. Be patient, stay disciplined, and focus on building a solid foundation for your future. And that's really all that really counts. Stay focused, because if you remember, you win in the end. You just gotta choose what path you wanna go. The hard way or the easy way. Just keep your eyes on the prize. And the hard way or the easy way is literally based on the moves you decide to make. If you're not gonna educate yourself, if you're not gonna get disciplined, if you're not gonna strategically, you're gonna be on a roller coaster ride with everything that we just talked about. But if you get yourself in the mode of being disciplined and doing it now, it gets so easy. I promise you. I promise you. So, in conclusion, creating leverage through assets acquisition is a powerful strategy for building wealth, achieving financial freedom, and building a strong strategic business. By understanding the principle of asset ownership and adopting a strategic approach, you can unlock the potential to amplify your efforts towards your generational wealth, passive income, securing securing a business that is not only going to prove beneficial for you, but it's going to last generations to come. It's about shifting your mindset from being a consumer to being an owner, building the foundations of assets that works tirelessly for you. All you have to do is establish consistently and focus on your goals. In the long run, owning assets is not just about wealth. It's about building a life opportunity of independence and true leverage for you, your family, and your community. Okay? So, we're going to start just to close off, so we'll know what we're talking about next week. I hope you guys got motivated. Y'all got some ideas of, what is assets versus liability. You start actually evaluating not only your financial situation, being truthful and honest, but your partnerships, your relationships with people around you. Some things you have to do away with so you can focus in on what you need to do, so you can learn, so you can move forward. So today's class was really focused on understanding the concept of assets versus liability, a mindset financially, as well as looking at it from a community-based development. Because once you have assets, you have power. And that's going to be honest. It's not power like power to do harm or to control, but as I've been mentioning to you, our private institutions have power over our economic development, over our housing market, over inflation, because they have the businesses that can lobby. So how are we going to be in competition with that? And that is playing chess when people are playing chess. Does that make sense? So with that goes to say, next week we're going to be going into our 4th week. Again, this is a 12-part series, 12-week series that I condensed 16 weeks into 12 weeks. Next week, I want you guys to get ready and have whatever business plan outline y'all want that you're comfortable with, because it's going to be flexible. We're going to be adding some sections to it and taking sections out. Next week will be our 4th week, and we're going to be moving in. I just summarized 2 weeks into one because I want to move forward. So next week we're going to be going into building bridges and lifting up your mindset, concepts to increase workforce development and passing down generational wealth. Okay, so we talked about credibility, organization development, and management, the importance of that. We went into finances just a little bit and making sure that we know the importance of diversifying our portfolio, making ourselves more lender worthy, just kind of entering it. And now we're going to get back into building bridges strategically to create changes in a low-income community, because our businesses is gonna be the one that makes the change. We're gonna create the businesses that our community needs, not only the businesses that we want to have, but what we need, so we can we can bridge the gap. And we're gonna also go into lifting up economic development strategies for low-income houses, okay? So it's houses and community. It's a little different, because when you have a household, it's run different from the community, but there's some of the same topics. And, we're gonna leave the rest as a secret for you guys. So we still have about 9 more weeks or so, 8 more weeks. I want to say thank you so much to the Fulton County Library. We are here every Wednesday at 2 p.m. on Campbellton Road, where we host our economic development seminars. My name is Lashley. If you don't know, after our seminar, we are on our Grace Levi page. We will be giving out 96 meals today, and I'm so excited. So join us on our sister channel, where we're giving back to our community just a little bit more. Please hit the like button and share our content. I'll see you next week.